Welcome back. Now, consumers are feeling more anxious this year than they did last year, or rather less anxious. This with regard to finances and the escalating costs of day-to-day goods, while budget allocations for critical items deteriorate. These are the findings of Deloitte's assessment of consumer well-being via its latest Consumer Signals report. Hannah Marais, acting chief economist and economic advisory leader for Deloitte Africa, joins us to unpack the findings of the report and what it suggests about the local consumer in greater detail. Thank you so much for your time, Hannah. Less anxious, not more anxious. Of course, with this anxiety having come off from last year, is this a relief that we have reached the peak of the economic headwinds and maybe not necessarily the relief from the headwinds?
Thanks for having me. And yes, I mean, in the terms that we compare to a year ago, this is February data 2024, because we do survey consumers about every 4 weeks. Anxiety levels look like they've dropped a bit. That said, they are still net anxiety levels, right? So anxiety is still high in terms of the ability, to spend, to make ends meet, and financial situation through and through. And we've seen that play out, obviously, in the last few months, given that this is end of February data. And I think a number of things have really continued to drive that anxiety from a year ago, even though we're seeing some things emerge perhaps a little bit more strongly. One of the key things that still drives anxiety is the personal financial situation, even though we're seeing some improvements there. It could be perhaps with some slight wage gains we've seen in some sectors, but generally, wages have not kept up with inflation across industries. A second point is really the direction of the economy. I mean, a year ago, we were, worst year of load shedding. We only came in at 0.6% real GDP growth in 2023. And I think there's been that anticipation that things will get better. And I mean, the outlook for the economy is just over 1% for 2024. But I mean, that's not really, much growth. Another key driver of anxiety, where we've actually seen some, increase, is around political uncertainty. And certainly no surprises there with the elections. Now we are in the election months, right, happening this year. And perhaps another element continuing to drive anxiety is personal well-being, particularly health as well. Yeah.
Thank you for that. Hannah, I must ask you then about what we're also seeing, a trend emerging about how much consumers are then spending on both education and healthcare. I think that's also a bit of a concern, the way that I read this information. It does also point to the fact that, of course, these consumers would possibly be double taxed. Their taxes that they pay to SARS, of course, go to healthcare and go to education, and then they still try to invest in that otherwise. But all of it speaking to the fact that the strain is cumulative.
Yeah, absolutely. And I think a general trend that we have been seeing is that more of the wallet is being spent on essentials, particularly that time of the year where we see more discretionary spending usually peak around, Black Friday, November, and going into the festive season in December. The time of year that is February and thereafter is usually more on essential spending. In our data, that's generally groceries and food. We all need to eat. We need shelter. It's housing. And perhaps another data point to mention is that this is specifically the middle class consumer here that we're looking at, largely in urban areas. And to your point, those are often consumers that both pay taxes, but also perhaps have private health care, right, spent on private education perhaps as well. So there is a greater share, for example, that would be spent of disposable income on those. That said, we've seen that decline. I think we know South African consumers as well are not in a position to always save. They haven't been in a while. They have quite a bit of debt as well. And I think the concern just is, particularly in an element such as healthcare, for example, and the personal well-being anxiety indicators we've seen is that you're not investing in your future ultimately. So that's perhaps one of the key points that we raise in our report as well.
Of course, one of the biggest economic realities continues to be inflation. I mean, we've even seen that in education and also healthcare. Where are consumer inflation expectations at the moment, and maybe just the biggest concerns in that basket?
Absolutely. I mean, the data as at end February, when we surveyed the sample, indicates that 87% of consumers were still expecting everyday prices to have that, inflationary pressure. And one of the key categories, when you break it down, was around fuel. About 88% of consumers were expecting, that price pressure to come from fuel. And I mean, while oil prices, or the expectation around oil prices and fuel prices for 2024 perhaps aren't as high as some of those shocks we've seen in the past. I mean, if we just look at some of the recent petrol price increases, that fear has, come to fruition perhaps. Food prices still was of concern to our sample. About 83%, expect food prices, grocery prices to increase. And while we've seen, that double-digit inflation, a double-digit increase in food prices submerged, we've seen single-digit increases, and we've actually seen some of the lowest food price increases since, I think, it's September 2020, in March 2024. So that is improving food price inflation in key categories, but I think, the worst is not over yet, particularly with some of the weather patterns, think El Nino patterns, that we are seeing maize harvest, etc., which will implicate maize prices, etc. So, yeah, I think the concerns are well-founded.
Let's also talk about the issue of savings then, Hannah, because what it tells me at this point, South Africans just aren't in a position to save. That, of course, speaks to personal finances, but it also speaks to wealth building, that taking a back burner as we see consumers in what I might call survivalist mode.
Yeah, and I think, when we look back at the days of COVID-19 and particularly some of the lockdowns we were in, we weren't spending as much, particularly not on goods. So there were some accumulations of savings, for consumers. But on the flip side, there was also, an increase in unemployment and people that ultimately couldn't work. If we look at global markets, for example, we've seen in a lot of economies, including the US, consumers tapping into savings to get through, particularly this high inflationary era. I would argue it's not, the similar savings that we've had in South Africa. So I think what we're seeing in our sample at the end of February is that realization that, where there have been savings, perhaps, that those have been depleted and that one needs to save, right, for a rainy day. So I really just also think it speaks to reallocation, prioritization, ultimately budgeting, right, and putting something aside where you can. But I mean, generally, we've had, a very low, at times negative savings rate in South Africa.
All right. Well, thank you so much for your insights there on the state of the consumer, Hannah. That was Hannah Marais, Acting Chief Economist and Economic Advisory Leader for Deloitte Africa.